Here comes another big headline. The drama in the US never stops. It's truly a show that never ends. This time, the main characters are Trump and Musk. From close allies to bitter rivals, they've gone to public feuding in less than a year. Now, their falling out has directly impacted Tesla's share price. During the session, Tesla's stock plunged 17%, and Trump even directly threatened to cut government subsidized and contracts to Musk's companies. So as a result, Tesla's intraday drop exceeded 17%. By the close, shares were still down over 14%. Tesla's market cap instantly lost more than $150 billion. This marks the largest single-day market cap drop in Tesla's history. Tesla's sharp decline also dragged down both the S&P 500 and the Nasdaq. During the session, we could clearly feel the impact. Look at the Nasdaq index. Right after the open, it gapped up, pulled back a bit, but then rallied and hit a new intraday high. It broke above yesterday's high. But later, because of the clash between the Musk and the Trump, this public spat quickly shifted market sentiment. The mood turned instantly. The broader market started to slide. The Nasdaq also fell sharply as a result. The Nasdaq index is now at a critical level. This is a key moment. It looks like there's a real chance to challenge its previous highs. That possibility is clear. But this unexpected turn of events changes things. If it had broken out, it could have given a strong positive signal to the market. But now with this development, what comes next? This situation between Musk and Trump has just begun. The feud is only getting started. In the end, it's bad for both of them. This kind of public fight helps no one. For Musk, it's already hurting his business empire. Tesla's sharp decline makes that very clear. This sell-off clearly shows that the market's confidence in Musk is now being shaken. Wall Street might start turning bearish on Tesla. For Tesla, its EV business was already under pressure. In this situation, Musk's political stance and controversies have also caused some consumers to feel alienated from the Tesla brand. That negative sentiment is real. Now, with Trump threatening to pull billions in federal contracts from Musk's companies, if that actually happens, then Musk's business empire would be directly impacted. Tesla would be hit the first and the hardest. It would further squeeze their profit margins. And you can already see this in the stock price. It clearly shows that Tesla is extremely dependent on Musk's personal image. This is far from ideal. If Musk's reputation takes a hit, it directly drags down his listed companies. Their fortunes are too closely tied. That's not healthy for the business. If the company's future is so dependent on one person, that's not a good sign. So, as Musk becomes more embroiled in politics, the outlook for the company also becomes clouded. Looking at the stock, it's clear. Tesla's recent decline has been huge. The drop is significant, and right now it's already broken through a major support level. We can see it in the stock price. This key support area has been broken. Now the downside has opened up. If you look at the daily chart, you might not see all the details, but switch to the 1-hour chart, it becomes clear. There's a decisive breakdown. Technically, this opens up more room to fall. That is why we say the downside risk is real. If we draw it out, you will see it clearly. Earlier, the chart clearly showed a bearish pattern here, and that pattern is easy to spot. It's a classic head and shoulders top. This head and shoulders is a classic reversal signal. Once the neckline was broken, it gapped it down hard. The breakdown was very sharp. That means the downtrend is in play. So, in the short term, the stock will likely remain weak. Tesla has taken a big hit to investor confidence. Looking ahead, Tesla's fundamentals have already been weak and declining. Performance is way down, and now this new turmoil has made things worse. So, when it comes to Tesla's future, the outlook is very uncertain. This has cast a shadow over the stock, and the market is reacting immediately. The downward trend has clearly begun. Looking at the daily chart, the MACD indicator has already formed a bearish crossover. You can see it step by step. Right here, after the crossover, The downside momentum is clearly picking up. It's building up with each move. Even without this public clash between Musk and Trump, Tesla stock would probably still have trended downward, just not as sharply as now. But this incident was a catalyst that hit investors' confidence in Tesla and clouded expectations about the company's future. So, with shaken confidence, the outlook is less optimistic. The near term forecast isn't great. There's no quick fix to reverse the market's negative sentiment toward Tesla. It will take time for this negativity to heal. So, for now, it's going to be a slow recovery. In the short term, the trend is still likely to stay weak. Especially during this breakdown, we're seeing a clear spike in trading volume. This volume wasn't seen for a long time before this. It's been quite a while since we saw volume this high. This surge in volume resulted in a sharp long bearish candle. That strong breakdown on heavy volume is a clear sign. A candle like that is very damaging. It will be hard to recover quickly. It's tough for the market to reverse this kind of sentiment in the short term. It won't be easy to see a quick rebound. After all, the conflict between Trump and Musk and their falling out may continue for a while. Their war of words could drag on in the short term. We might keep seeing this play out, especially now at such a critical moment. Actually, in recent weeks, the US stock market has become less sensitive to bearish sentiment. Investors are even buying it regardless of Trump's politics. But if you look at history, a market that ignores obvious risk is always dangerous. Right now, there are still many uncertainties. Plenty of risks remain. There's a lot of uncertainty. The market is ignoring a key risk. And what is that? Well, it's Trump's proposed tax reform bill. This was introduced on May 22nd. On May 22nd, the Republican controlled House of Representatives in Congress passed Trump's bill by a very slim margin. It's a massive tax and spending bill. Trump's administration calls it meganomics. This bill, if passed, will have a major impact on the markets. If this issue isn't resolved, it will be tough for the market to ignore the risk and see a strong rally. So, in the short term, it's unlikely Tesla in particular is feeling the impact. It's very hard for the company to turn things around quickly right now. And looking ahead, this pessimism in the market could gradually become more visible. Especially with the upcoming non-farm payroll data, everyone is watching that key number. But one thing we can't ignore is the Trump administration's tariff reform policy. This Big America Act actually has a long-term impact. In short, this policy has two main points. Why is it seen as negative? Just look at these two aspects. First, it cuts taxes, slashes Medicaid, food assistance, education, and clean energy spending, and then relocates those savings to what? To military and broader security. Second, it raises the debt ceiling, allowing the federal government to keep borrowing to finance the debt. Because of this, many professional institutions are predicting this bill will have serious consequences. So, what could happen? There are mainly two risks. First, the first consequence is that the federal deficit will soar. Right now, the US is already facing a debt crisis. There's $36 trillion in debt. If it keeps growing, repayment becomes impossible. That could lead to default. If the US really defaults, it would deal a systemic blow to the market. In the worst case, it could trigger a financial crisis. That's a real possibility. The second risk is that the number of people with no safety net will rise. That hits America's most vulnerable and creates a major social impact. You could say this tax reform plan is basically robbing the poor to benefit the rich. So many US politicians are unhappy with this bill. A lot of them have openly criticized it because this legislation would essentially sacrifice health care for tens of millions of Americans just to give the wealthiest 1% another $1 trillion in tax cuts. So there's a lot of skepticism in the market. A lot of people are questioning this. If it really gets implemented, the negative impact will be significant, but this is not something that can be swept under the rug. It will have to be addressed eventually. If we look at the upcoming major non-farm payroll data, especially considering the recent ADP numbers, well, it's likely the non-farm report may not be very strong either. That's the current market expectations. If the data disappoints, then the outlook for the US economy could turn more negative. This would be reflected in the markets. For Tesla in particular, the environment remains tough. The company is under pressure and outside factors are also negative. Overall, the downtrend is likely to continue. That's not going to change soon. So for Tesla at this point, the direction is still downward. Frankly, it's not worth focusing on Tesla right now, at least not in the short term. Of course, short term, there are not any real opportunities. If anything, the risks outweigh the rewards in the near term. Some people may think that with this downtrend, especially the sharp drop, with increased volume, you might spot a reversal at the lows. Some even see a W bottom forming intraday. And yes, the biggest intraday drop was 17%. So at the lows, there did appear to be some bottom fishing and a W-shaped rebound. It's clear some capital is buying in, but does this mean the downtrend is over? Definitely not. Don't get your hopes up. This is just a technical rebound. After the bounce, the downtrend will likely resume because right now the headwinds remain. The negative sentiment isn't over yet.